I do think there's a very high probability that a tariff solution happens before the next 3 weeks happens. And it's simple to see
Okay.
because China, Europe, Canada, Mexico, since April 18th, all of those countries have outperformed the US. I don't think that markets are that blind to say if Canada and Mexico are about to have a recession, they should outperform the US. And I think the second thing people should keep in mind is that when you have a global crisis brewing, and we highlighted like the 1962 Cuban Missile Crisis, that was a 12-day crisis, but the markets bottomed 7 days into the crisis. 5 days before that crisis ended, the market was already recovered 2/3 of the losses.
Tom Lee, the chief investment officer at Fundstrat, has been one of the most accurate voices on Wall Street in recent years, often making calls that go against the mainstream narrative. Now he's talking about his vision for where the economy is headed in 2025, and it's contrary to what most people expect. While many fear that high inflation, rising tariffs, and geopolitical tensions could push the US into a recession, Tom Lee isn't convinced. He believes the economy is far more resilient than people realize, and the Federal Reserve may actually be forced to cut rates sooner than expected due to deflationary pressures. But that's not all. The job market could get messy, with potential disruptions from deportation policies and government austerity measures. Meanwhile, consumer confidence is hitting multi-year lows, raising questions about whether spending will slow down. And yet, Tom Lee still sees opportunities in the market, pointing to small caps and digital assets as potential winners. So what does all of this mean for investors? Is a market rally still possible, or are we headed for a major slowdown? Throughout 2023 and 2024, many economists and investors were convinced that a recession was inevitable due to the Federal Reserve's aggressive rate hikes. But Tom Lee didn't buy into that narrative. His reasoning was based on key economic indicators like capital spending and consumer debt levels, which showed no real signs of exhaustion during that period. He argued that the economy still had room to grow, and he was right. Instead of a recession, the S&P 500 surged more than 25% for 2 consecutive years. And today, while many investors fear that inflation will force the Federal Reserve to keep rates high, Tom Lee sees things differently. He believes that the impact of tariffs and economic uncertainty is actually deflationary, not inflationary. With consumer confidence already dropping, he expects the Fed to cut rates sooner than most people think. Even when it comes to the job market currently, the bears often point to it as a potential weakness. Tom Lee acknowledges that employment conditions are changing, especially due to factors like deportation policies and government spending cuts, but he doesn't see this as a collapse. Instead, he argues that companies are adapting and that certain sectors like small caps and AI-driven businesses will continue to thrive. Tom Lee also challenges the popular belief that inflation is spiraling out of control. While prices have risen significantly over the past few years, he believes that inflation is now stabilizing. In addition, the recent market volatility has renewed fears of a major downturn for a lot of investors, but Tom Lee remains confident. He sees the recent pullbacks as short-term panic rather than the start of a bear market. In his view, investors who are too focused on short-term uncertainty are missing the bigger picture, an economy that is still growing and adapting. However, in recent weeks, a growing number of companies across various sectors have issued warnings about weaker earnings, reflecting mounting challenges in the global economic landscape. Companies like Nike, Walmart, Mercedes-Benz, and Tesla have been warning of weaker earnings and lower sales forecasts, signaling growing concerns about consumer spending and supply chain disruptions because of the ongoing tariff situation and the global economic uncertainty in general. But despite all of this, Tom Lee is still positive about the economy. He mentioned that small caps are one of the sectors he thinks presents a big opportunity, together with digital assets like Bitcoin. Tom Lee believes that once the tariff talks go away, the environment will become favorable for such companies since their multiples are lower.
And the third, of course, is small caps, because once the tariff talks go away, the environment is favorable for American-focused companies, which would be, small companies, and they'll benefit from lower rates and their multiples are lower. So I think it's still a big opportunity. But in the middle of tariff talks, none of these groups can really do that well.
When it comes to Bitcoin, he believes that Bitcoin's usefulness is still improving and anticipates that the trust around Bitcoin will grow over the next 5 years. In addition, he expects it to be increasingly viewed as a store of value, similar to gold, and he sees room for a lot more people to own it. His downside target for Bitcoin remains $62,000 by the end of March. When considering if $62,000 would be a reason to become bearish on Bitcoin, Tom Lee suggests that it isn't, especially for long-term investors. He points out that considering Bitcoin's price of around $100 10 years ago, a price of $60,000 still represents a fantastic return.
The best strategy for our clients that we've recommended is you just want to be a long-term holder.
Mhm.
But most people don't approach crypto that way. Most are trading it and want instant return. The work by our technical strategist, Mark Newton, so he thinks Solana, Ethereum, and Bitcoin all have downside. He has been bearish since mid-January. So I think it's been correct. And his downside target for Bitcoin is 62,000 by the end of March. But to me, is 62,000 a reason to turn bearish on Bitcoin? I mean, if you're trading it, yeah, but Bitcoin was $1,000, well, $100 10 years ago. So, 60,000 is still a fantastic return. And I think Bitcoin's usefulness is still improving. I don't think it moves. It's still a risk on assets. So I don't expect it to do well if the market is being hit by tariffs. Like it's not immune to that kind of turbulence. But is the trust around Bitcoin going to grow over the next 5 years? Yes. And is it going to be increasingly viewed as a store of value like gold? Yes, I think increasingly. And then is there room for a lot more people to own it? Yes. So I'm not really bearish on it, but I think in the near term, it's hard to say it should go up right now.
Overall, Tom Lee's bullish stance has been controversial, but it was also correct several times. While the bears continue to predict an economic slowdown, he believes that the U.S. economy is far more resilient and that markets could still see significant upside in 2025. So, is Tom Lee right again? Comment down below what you think about his predictions, and don't forget to subscribe to the channel. And with that being said, see you in the next one.